Madam Ronke, please assign the co-host status to the paper presenter.
Okay, sir. Okay, sir. Okay. Ramat. Let me tell you today to make Ramat co-host.
Can you hear me?
Yes, ma. Please continue, ma.
Okay. Let's start again from reason for the growth of informal sector.
Okay, ma.
I've explained the first one, that is economic hardship and poverty can make, is one of the reasons why the informal sector continue to grow. Then weak institutions. The weak capability of formal institutions to provide education, training, infrastructure, as well as other incentives for structural reform contribute to the growth of the informal sector. The formal sector, the formal institutions were unable to provide necessary education, training, infrastructure, and under incentive for the formal sector to go. That is why the informal sector to continue to grow, because we have weak institutions. Another reason is infrastructure deficit. The big company requires infrastructure such as electricity, good transportation network, etc., to successfully operate in an economy. The constant deficit of infrastructures in developing economy has kept the numbers of players in the informal sector high. Because for you to be within the economy as an entrepreneur, and big in quotes, you must have a strong infrastructure in place, such as electricity, good transportation network, that where you can move your business, you can move your product from the location of production to the consumer. You should have access to electricity, water. Since we don't have this, especially in Nigeria, we don't have good road, we don't have electricity. This kept the informal sector to continue to grow. Everybody, every household, we are the neighbor of ourselves. The roads, when you have a car, when you have a lorry, for you to transport your goods to the marketplace, the road you are going to pass is a problem. Before you get there, maybe you have your tire must have get out of the car, or something must have happened to your car. You stop and try to fix all this. Instead of us having this good infrastructure that will make our business to strive, that will make our business to continue to grow as former business, as former sector. We don't have all this in place. That is why the informal sector continue to grow. The demand for low and cost goods and services is another reason why informal sector continue to grow. Movement to urban and city have led to an increased demand in low cost of goods and services, as many of immigrants cannot afford the costly item in the city. This increased demands of low cost has demanded for the need to have businessmen who place in inexpensive market that can be affordable to the new entrants. Since everybody wants to be in the urban city, and not everybody can be in urban city, those that are unable to be in urban, the city, they should be able to get something doing. They should be able to get their own market. They should be able to lay their hand on something to be productive. So we need to have can we call it middleman? It's not even middleman. So those that reside in the rural area play the role that those businessmen in the city are playing. So for you to be in the rural area, you will not have enough capital to be in formal sector. So that is another reason why there is a growth in informal sector. Out of all this, out of formal informal sector, where do we place tax? Where do we place tax? What is even tax itself? Tax is any compulsory payment made to government as imposed by law without any direct benefit or return of value or service. Taxation of informal sector in Nigeria. Federal government has not given the informal sector so much attention. That's why it's significant in the Nigerian economy. Like I said the other time, the informal sector pay like 62% in our economy. Still, the federal government they have not seen it right. They are not doing it right to have the informal sector, to place the informal sector where they're supposed to be by providing them enabling environment, despite their importance in the Nigerian economy. An attempt was made in 2015 when federal government introduced presumptive tax (PT) as a means to administer taxes on informal sector. However, this does not yield any positive effects or results. Federal Inland Revenue Service (FRS) and Corporate Affairs Commission (CAC) collaborated to ensure more businesses are brought under the formal regulation of government. This effort led to the automatic enrollment of tax identification number, which we call TIN, for every company that registered with CAC. Also in 2019, the Federal Inland Revenue Service declared its intention to tax online transactions at the payment points. Unfortunately, none of these efforts by federal government has yielded meaningful results. The result we are seeing is not as what we are expected. They are not so significant as why the government put in place all these incentives. However, through Finance Act 2020, the federal government has exempted companies with less than 25 million from paying compulsory income taxes and registering for value-added tax. Let me come back to my state, Kwara State. Kwara State implemented proactive solution to boost voluntary tax compliance within the state. It introduces presumptive taxes where markets and artisans are taxed through union, organization, and executives. The PT is payable per annum. Most of the artisans, they pay a flat rate of 1,500 per annum. Even with this, you see people, you see they will give notice, they will still not pay the tax. Some will even decide to close their shop when they see that the tax people are coming. Then in River State, the informal sector was divided into 7 categories, with each group having a distinct tax rate. That was hello? Hello?
Continue, ma. Continue, ma.
Okay. In the River State, the informal sector was divided into 7 categories, which each group having a distinct tax rate that was determined based on structure and size of the trade groups. Collection of tax is based on demand, notice, and payable to that state, designated with a bank. These are some of the efforts made by federal governments and states to see that there is the increase in capturing the informal sectors into the tax nets. But with this effort, the yield is not as much as we are expected. The challenges of informal sector. With all the incentive from federal governments, the state governments, we still have challenges in informal sectors. Why these challenges? The first challenges is lack of documentation. Lack of documentation. Many of small businesses do not file returns like the big companies, hence have little or no documentation to which the tax can be based. So when you don't have record, you do not even register, how would the government capture you as a business entity to tax the profits you have made? No, there is no way that could be done because they lack documentation. Even the little one they have, it is incomplete. So the second challenge is for informal sector, lack of regulation. Majority of small businesses in the informal sector are not under regulatory of any authority. This limits the control of government to exercise how to track them. Since there's no control, since they don't even register, so they cannot be monitored like the formal sectors. The next out of the challenges is multiple taxes. Many small businesses complain of multiple taxes, fees, levies from different quarters. This has the potential to meet the growth and transition of small business to big one. When you are paying taxes in different angles, you pay for the states, you pay for the local government. So what is even their profit? So their profit is small to talk up, and we are taking taxes in different angles. So that is another challenge of informal sector. Little information of business. In informal sector, you get to know them by chance because there is no much information about the business. Due to the one-man business of many players in informal sector, the businesses do not have or maintain of business information to allow government asset tax. Lack of government support. Even the bigger one, even the formal sector, do they have access to infrastructure? There's no light, There's no good growth. Talk less of the small enterprise, the informal sectors. So lack of government support is one of the challenges. There's no grant. Even grants for small, medium and small businesses that they should apply, they should do this, they should do that. I was even a victim when there was a lockdown last year. Then, like 20 of us, we gather ourselves together to start something farming. We register as a member, as a cooperative. They said we should go to a bank. We did. They capture the land. They capture what we planted. My brother, my sister. That is the end of the story. We did not hear anything. And we are more than 20 that we spend our little money to start this farming. So that is one of the problems of or challenges the informal sector faced. No incentive, no grants. Then another one, no room for growth. When you don't have incentive, when you don't have enough capital, how will you grow? You start a business, yourself or 1 or 2 members, you contributed, you do contribution, you do cooperative. But every business wants its own business to grow. That's the concept of continuity, going concern. But for informal sector, there is no room for growth because their capital is so small and they don't have access to infrastructures to make their growth to be like snake growth. The movement of snakes that is one of. Then let's see from other countries. Let's take Ghana, for example. About 88% of workforce is employed in the informal sector. Taxation of this sector is carried out through taxation taxing. A survey of taxing of the informal sector shows that the government collects taxes through local market association or business group. Ghana, they use association to tax the informal sector. When they know that the workforce is 88% that form informal sector, leaving about just 12%. So they have to look for a way of getting tax from their informal sector. That is why they use what we call association taxing. Then in Tanzania operates a PT regime for small and medium businesses. PT is charged on businesses with less than 100 million. That is like 43,000 US dollars for an income year. The tax is collected through a block management system by which tax collector identifies small and medium enterprises and levy PT based on turnover from record or an estimate of turnover where there are no record available. That is another method that Tanzania used. They use tax collector to identify the small and medium enterprise and they now levy them based on their turnover. Even if you say you don't have record, they still find ways of levying the tax. In Kenya, in 2018, Kenya introduced presumptive tax, the first 2019, at the rate of 15% of business permit or trading fee. PT is payable by a resident person whose turnover from business is less than 5 million Kenya shilling. That is, if your business is less than 5 million, that is $46,000 US dollar, the Kenya will take the tax 15% of what you have as your profit. The beauty is based where the that is high tax quota. Penalty and interest for late payments is 5% and 1% for tax due respectively. That is, if you are late to even pay your tax, you are going to pay additional 5% for late payments of your tax. They were able to do this because they put different mechanism on ground, so that they have seen that the informal sector are more of their workforce. So when they have more of informal sector as their workforce, leaving them not paying tax, it will be detrimental to the government. If there is no tax, how will the government do what they're supposed to do? How would they do all their projects, both capital and recurrent? So that is what other countries have done: Ghana, Tanzania, and Kenya. Conclusion: with significant drop in oil revenue and the fact that income from taxes in Nigeria is one of the lowest in the world, Nigeria government needs to find solutions to bring in more businesses into tax nets. Tax to GDP ratio constitutes less than 8% compared to OECD of 33%. Okay. See the difference, 8% to 33.3%. We have a long way to go. So Nigerian government needs to do more on how to capture this informal sector into the tax net. The possible solution to do that: 1, taxes informal sector through market organization, like what they have done in Ghana and Tanzania. Taxes informal sector through market organization, business group, and union. Deploy technology to help track and collect information on informal sector business. I know the Kwara State Inland Revenue have started doing this too. If every other state can do this too, I hope it will boost the tax revenue of that state, or even the government as a whole, federal government as a whole. Then, taxes digital businesses through collaboration with banks and fintechs. That is, if we can find way to tax businesses through their bank, then definitely this will increase the tax that the government will get from informal sector. Thank you for listening. Hello? Hello? Hey,
thank you so much, Ma, for the presentation. Despite the disruption, I can tell you for sure that Dr. Ramat Titilayo is a grassroots person. From her own perspective, you could understand where she's coming from, that she understands the terrain and the issue that has to do with informal sector and what they're actually going through. So that was a well-delivered paper. And on behalf of the Education Committee, I'm giving you an online round of applause. She has been able to take us through the overview of the informal sector.
Thank you.
The contribution of informal sector to the growth of the economy, tax administration in the informal sector. She even gave us a perspective from FRS, from that of Kwara State and River State, and took us to the diaspora on lessons from other countries as far as challenges of the informal sector. Honorable Taiwo, kindly mute yourself. We'll get back to you, sir. So these are some of the highlights before she concluded powerfully. You know, she even gave us example of what she tried to do with other people during the COVID time and the challenges they face. So you can see that when I talk about her coming from the background of a grassroots person, you understand what I mean. That is a well-presented paper according to Mukaila and Emma Sharon. We appreciate you, ma. I want to quickly check if we have a questions for her. If there's no question, so that we can just go to the last paper for the day. Okay, do we have Mr. Iwu online? Mr. Iwu, do we have you online? Okay. Just a minute. Omidiji, do we have you online? If we have you, unmute yourself. Okay, we have somebody with Galaxy A01. You see, the unfortunate thing about not naming your device is that we'll find it difficult to call you on board. However, I will give you this privilege.
Mr. BDG is online. I'm not sure Mr. BDG is online.
No problem, sir. Thank you so much, sir. I'm going to give this privilege to this person raising hand, Galaxy A1, but it's just for today because I'm in a good spirit. So I'm going to allow you to make your comment, but just be very brief. I've unmuted you, so kindly ask your question. You can unmute yourself, please, and make your comment or question. Galaxy A01. Unmute your system and talk to us, please.
Do you hear me, sir?
Yes, I can hear you. Please introduce yourself. You have muted yourself again. Unmute yourself, please. Introduce yourself and have the floor. Your system is still on mute, please. Galaxy A01. Your system is still on mute. Unmute yourself and address us. Well, I'm sorry, I may not be able to take you further. Our professional colleagues, ladies and gentlemen, I want to appreciate our paper presenter, Her Excellency Dr. Ramat Titilayo. You all agree with me that despite the challenges, technical hitches, she was able to deliver her line. So from Education Portfolio, we are thanking you so much, Ma. And from the council too, we appreciate you. And like I normally say, in the Education Portfolio, we are Oliver Twist. Just be rest assured that we'll still knock on your door one of these days to come and do what you know how to do best. Thank you so much, Ma.
Thank you, sir.
And may God bless you, Ma.
Thank you, sir.
Yes, Ma.
You will be welcome.
Yeah.
Thank you.
Okay, Ma. Yeah. Ronke, please, you can please take us to the last paper for the day. Madam Ronke, while we're waiting for Madam Ronke to come on board, if we have the chairman of Ilorin and District Society, he can please make his remark right now. Honorable Taiwo Abdullahi, it's like you wanted to talk to us. You can unmute yourself and please have the floor.
Yeah, thank you, sir.
You can continue, sir.
Thank you, sir. Thank you,
Yes,
sir. I feel honored to be part of this program. On behalf of Ilorin and District Society, we want to sincerely appreciate all the participants of today's mandatory professional training program organized by Chartered Institute of Tradition of Nigeria. I believe we all enrich with the knowledge of the first and second paper presenter, and I assure you that our last paper presenter as well will be more knowledgeable. I sincerely appreciate you, and on this note, I want to thank everybody. I hope you have a great time.
Okay. Thank you so much, Honorable Taiwo Abdullahi, for your remark. Dr. Ramat, please, you can take down your paper from your end. Why, Madam Ronke, please, can you please read out the profile of the last paper presenter for us? You can abridge the profile so that we'll manage our time. Madam Ronke, are you there, please? Auntie
Hello.
Ronke, you please have
Hello,
the floor.
sir.
Yes, I'm with you, ma'am.
Mrs. Ronke is not around. I'll take
okay.
You
can have the floor.
Dr. Raman, please take down your paper so we can share the
paper
for.
Okay, thank you. Wá bá ń yọ pépà mi kúrò. Wá bá ń yọ kúrò. Ẹ̀jọ̀ ń fẹ́ gbé mi sílẹ̀. Mi ò rí omi tí wá sàlẹ̀ bò kí.
Okay, the last paper for today will be taken by Barrister Chukwuemeka Eze. So let me read out his a brief profile. Barrister Chukwuemeka Eze is a native of Mgbom Okosi in Ebonyi State. He was born on 4th of January 1964 and married with children. Eze became an associate member of CITN in 2008 and he became fellow in 2013. He was chairman of CITN Ikeja District, a member of council, and also member of the board of the National Advisory Council against money laundering of non-financial institutions. Eze is a legal advisor of the West African Union of Tax Institutes and one of the legal advisors to CITN. He has attended tax conferences within and outside the country, including the Commonwealth Association of Tax Administrative Conference in Rwanda in 2013, and the Confederation Fiscal European Conference in Belgium. Sorry if it's not well pronounced. He's a resource person to many organizations, a regular paper presenter in CITN seminars and mandatory professional training programs. He was a tax columnist in Daily Sun and Union newspapers. He has been the editor of the Joint Tax Board newsletter since 2012. Eze has attended workshops on procurement at the Bureau of Public Procurement and in anti-fraud and anti-money laundering training. He's a legal advisor as well to the Lagos chapter of Association of Certified Fraud Examiners. On July 12, 2018, the Honorable Minister of Finance appointed Eze as the chairman of the Southeast Zone of the Tax Appeal Tribunal. The Federal Minister of Finance inaugurated him, among others, into that position on November 5, 2018. Eze is a tax resource person to NTA, a resource person on international law and diplomacy to Channels TV, and an African affairs justice person to TVC. On this, we welcome Barrister Eze to do justice to the topics he's going to take us on today. Barrister Eze, kindly unmute yourself to continue, sir. Barrister Eze.
Kindly unmute yourself and let's have you on board, sir.
Okay, can you hear me now?
Very loud, sir, and clear.
All right, thank you.
Kindly share your paper so we can continue, sir.
Okay, I'm ready.
Can you share your paper from your end, sir? If you can share so that the secretariat can give you a technical support.
They should give me.
Okay, secretariat, please share his paper while he will continue with the presentation. My lord, you can continue with presentation while they share your paper.
Okay, all right. All right, the paper is divided into parts 1 to 4. Part 1 is overview of tax dispute resolution in Nigeria. Part 2, tax dispute resolution mechanisms. Part 3, hello?
This is Godwin Oyedoku.
Yes, sir.
Welcome, sir.
Thank you, sir.
Just to tell you that I'm in your class, so that my assignment can be marked. Okay, you have done what I actually wanted to call your attention to. Thank you so much. Yes, sir.
Okay, now.
Okay,
part 3 is tax appeal tribunal to the rescue. Part 4, conclusion and recommendation. So we go into the main paper presentation. Under part 1, you are supposed to know that for anything taxation, for a country that runs a constitution, you start from knowing what the constitution provides. Here, we did not provide, or I didn't provide all that you need to know about constitutional provisions, but only about tax dispute resolution. Section 6 provides for a hierarchy of courts. Section 36 of the Constitution provides for fair hearing, what we call right to fair hearing. That is to say, parties must be given the opportunity to be heard, because even from creation, for those who read the Bible, the Adam and Eve, when they committed sin, God, the omnipotent, saw them, yet he asked them, Adam, where art thou? He just wanted him to be heard. And that's why in a dispute resolution system, a tax authority should allow a taxpayer to be heard. Section 251 places exclusive jurisdiction on tax disputes on the Federal High Court when it has to do with the revenue of the Federation, not revenue only of the states, but that of the Federation. Section 251, Federal High Court exclusive civil jurisdiction. You may want to know where does the state high courts come in? I didn't put it in the beginning, but the state high courts come in when a tax authority has served all the documentation and the tax liability is final and conclusive. Then you can approach the State High Court under Section 104 of the Personal Income Tax Act for what we call by way of motion ex parte, that is to say without serving the other party. And that's why you see many businesses are sealed up because, and the banks will be saying, not only banks, the tax agents will be saying, nobody served us any paper. Suddenly they sealed up our company, maybe as a result of tax liability arising from payee, withholding tax on individuals, business premises, development levy, etc. So the power to do that lies, and the whole essence is that if it is final and conclusive, there is no need wasting time. If you can convince the judge at the State High Court, you just get an order to seal up the property, what we call levying warrant of distraint, to enable the taxpayer or tax agent to come and give reasons why the property sealed should not be handed over or be expropriated by the tax authority. So the onus or the burden to show that you are not owing that amount after your premises has been sealed will be on the taxpayer or the tax agent. So what I have just said now, you will not see it in this paper anyway. But as the spirit leads, I'll be bringing in one or two things not in the paper. But as for tax appeal tribunal, you have to go to section 59 of the FIROS Establishment Act in 2007. In 2000, that established the tax appeal tribunal to handle all federal taxes, cases involving or disputes involving federal taxes. Some people may do say that personal income tax is a state tax. It is not true. It is a federal tax. How do I know? You ask yourself, who imposed the tax? It is the National Assembly. So the National Assembly imposed it, allowed the states to collect, allowed FCT to collect, and allows Federal Inland Revenue Service to collect. If it is a state tax, why should FIRS still collect from diplomats, collect from non-resident persons, and FCT IRS collect from residents of FCT? So for those who have been thinking that, because a lot of arguments come before our tribunal, especially now that there is a case called Skybank PLC and Kwara State Internal Revenue Service. It is quite coincidental that this webinar is coming from Ilorin. Or the target audience is Kwara State. Now know it that there is a decision by the Court of Appeal in Ilorin Division holding that based on an appeal that went from the Ilorin High Court to Court of Appeal Ilorin Division. The holding is that Tax Appeal Tribunal does not have jurisdiction over state taxes. But over here, some lawyers have tried to bring it up in our tribunal, and we have made them to understand that a PIT, personal income tax, is not a state tax. And if you must delve back into the past, in the First Republic, it was a state tax. But in this republic, it is a federal tax. How do I know again? I direct you to item D7 or paragraph D7, first schedule, part 1. Sorry. Let me take it again. Item D7, part 2, schedule 2 to the Constitution. Let me repeat it. Paragraph D or item D7, part 2, schedule 2 to the Constitution. It provides that the National Assembly shall have power to enact tax legislation with respect to income taxes, capital gains, profits, and stamp duties. And if you read it in community or in combination with items 58 and 59 of part 1, schedule 2 to the Constitution, which is called the exclusive legislative list, you will come to the conclusion that any legislation on income tax in Nigeria is or has to be enacted by the National Assembly pursuant to Section 4 of the 1999 Constitution. You need to know this because when disputes arise, some people will be showing you only what their circulars provides. So I'm taking you to the foundation. No, move. I'm taking you to the foundation so that when you know these constitutional provisions, or any circular, or any other type of document, call it resolution, circular, regulation, order, that tramples on what I have just told you now, you know that it is unconstitutional. And by virtue of Section 1, subsection 3 of the Constitution, any law, regulation, or subsidiary legislation, as the case may be, that is inconsistent with the provisions of the Constitution is null and void to the extent of inconsistency, knowing that the Constitution is the supreme law of the land. So while reading any tax law, you have a mirror to measure every tax law, and that is the Constitution. Now I continue with the legal framework, the statutes. If you look at personal income tax, as amended, gave you the combined provisions, but I identified a mistake there. Section 61 to 66 have been deleted from the personal income tax by virtue of Section 14 of the Personal Income Tax Amendment Act of 2011. We no longer have Section 61 to 66 of Peter. So please, where you have it, delete it. And the Section 60 has been amended. What is the current amendment? Since 2011, Section 60 permits or allows any dispute resolution provided in Section 59 of the Federal Inland Revenue Establishment Act to be the method of dispute resolution to be adopted under Peter. And if you go to Section 59 of the FIRS Establishment Act, it will further refer you to the 5th schedule. The 5th schedule to the FIRS Act contains binding rules under the 5th schedule that will help you in understanding dispute resolution. That Section 59 creates the Tax Appeal Tribunal. And since 2010, the Tax Appeal Tribunal has been giving out additional justice in the course of resolution of tax disputes. Now let's look at companies' income tax. You see the provisions there. Petroleum Profit Tax Act. See the provisions there. Value Added Tax Act. Now, originally, the Value Added Tax Act created the Value Added Tax Appeal Tribunal. So, but we are aware that eventually, the case of Cadbury and FIRS, the Court of Appeal struck down Section 20 of the Value Added Tax Act, which created the Tax Appeal Tribunal. And struck it down. Why? There is a provision there that after you lose an appeal at the VAT Tribunal, that you should appeal to the Court of Appeal. Then the Federal High Court, found at it. So how will you bypass us and proceed to the Court of Appeal? It means we are rubbing shoulders. No, you are not a court. You cannot jump when Section 251 has provided that exclusively that every revenue of the Federation, we should handle it. So that was why the Court of Appeal struck it down. And today, we don't have, since 2007, we don't have a Value Added Tax Tribunal again. So anything cited in respect, everything now comes to the Tax Appeal Tribunal by virtue of Section 59 of the FIRS Act. So I also refer you to the FIRS Act to look at the legal framework for dispute resolution. Look at the regulations, under regulations and policy. You will see the FIRS Tax Administration Self-Assessment Regulations, the relevant provisions. Then Transfer Pricing Regulations 2018, which has supplanted that of 2012. You see the relevant regulations. Now, luckily for this webinar, you are the first set of webinar audience that we get. You are the first set of webinar participants that will be exposed to the Tax Appeal Tribunal Procedure Rules 2021. It came into force on 10th June this year, but has just been released to the public not more than 2 weeks ago. So any citation you get from here is that of 2021. And if you still have that of 2020, that of 2010, which we applied from 2010 to 9th June 2021, please note that under 1 Rule 2 of TAT Procedure Rules 2021 has revoked it. It can apply to old cases that you started before now. But as of today, you need to get TAT Procedure Rules 2021. If our institute doesn't have a copy, we will make a copy available to them. So I'll quickly take you beyond this page so that you take a look at that yourself, because we have very more important areas. Factors that may trigger tax disputes, they are self-explanatory. Failure of a taxpayer to discharge his constitutional duty. Okay, there is a constitutional duty on every citizen, every Nigerian, to pay his tax promptly to the appropriate authority. That's the provision of Section 24, subsection F.
My lord, sorry, I want to make an announcement.
Okay.
Abiodun Olatunji, please check a private message I've sent to you. Abiodun Olatunji, I sent you a private message. Thank you.
Thank you. So we are two tax authorities. For instance, those people in Ogun State who work in Lagos, sometimes Lagos Internal Revenue Service will come and hold them and say, you've not paid your tax. Some of them will say, I reside in Ogun State. So such can trigger off a tax dispute, although the law allows if it comes between two tax authorities, they can go to JTB to solve their problems. But let me advise you, if you stay in a locality, for instance, if you're in Akute, in Ogun State, and you work in Lagos, I don't know, if I use a Ilorin example, I don't know a place close to Ilorin but not in Kwara, where workers come from there to Kwara State to work. So there is this possibility that where your office is, you are being disturbed to pay. What you need to do is, your organization is, when they are registering for payee, they are supposed to infuse the addresses of the workers and forward it to the appropriate tax authority. And the tax authority that may disturb them, they can even copy them so that they don't come after them later claiming that, oh, you reside within our jurisdiction, you don't want to pay. So go to the next page, still on factors that may trigger, where a taxpayer disagrees by way of notice of objection. Where after entertaining a notice of objection, a tax authority issues a notice of refusal to amend, that's NORA. 3, where during a tax audit exercise, a tax authority refuses to allow certain expenditure as deductible allowance due to lack of sufficient evidence to substantiate the expenditure. See the relevant provisions there. Where there is lack of proper understanding, where assessment has become final and conclusive, arbitrary exercise of statutory powers. Now, tax disputes appeal and resolution. Where a tax dispute arises in any of the circumstances outlined above, the process of resolution may be commenced by either the taxpayer or the relevant tax authority, whether the FIRS or a state internal revenue service. So usually you start from where we are called as appeal tribunal is because it is taking that you have started your journey from the tax authority. So when they take a decision and you are aggrieved, then you come to the tax appeal tribunal. So look at the relevant provisions. I want to go to an area you are not conversant with. Move to the next one. I go beyond 1.4. I'm now in 1.5. I've spoken about that. Go to 1.6, 1.51, 1.5.1, establishment and composition of tax appeal tribunal. I mean, it's self-explanatory, but what I need to tell you is that as at 2010, when T80, we have the T80 procedure rules 2010, but 2009, we had the T80 order issued by the Minister of Finance, establishing the tax appeal tribunal. But the actual establishment was 2010. So up till 2018, you recall that tax appeal tribunal functioned for first tenure, 2010 to 2013, second, 2014 to 2016. That's the set of commissioners left. There was a vacuum. The T80 did not sit between 2016 June, after their last sitting was June 2016, up till when we started sitting November 2018. The T80 did not sit. When we start, so within that period, when the previous panel sat, they had 8 zones and 8 panels. Please listen attentively. The 8 zones, Lagos, Abuja, then the 6 geopolitical zones. You will see it in the paper. Now, when we came on board, they discovered that Lagos was having too many cases. They now split Lagos zone into 3 panels of 5 commissioners, each panel, panel 1, panel 2, panel 3, with their chairman and members. Allotted days for them to be. So as of today, we have panels because Lagos alone is having 3. Else, 8 zones, tax appeal commissioners, total 5 per panel. So let's go to the next page. The other ones you can read it easily yourself. So move to the next page. Where the zones are located, you will see it. So 2.1, assessment via reconciliation meeting. We all know this, that when you receive assessment, the next thing, if you are not satisfied, you will object. You will contact the tax authority and they will call you for a reconciliation meeting. So let me tell you, from the new rules of the tax appeal tribunal, Order 3 Rule 6, if you don't object, you run a risk of paying 50% deposit. 50% deposit, because it will be deemed that that assessment has become final and conclusive. And once it is deemed, you are required while filing your notice of appeal under Form T81A to accompany it with a form called Form T81B, where you will indicate the post that you have paid 50% deposit as security before your appeal will be heard. So it is necessary that you raise appropriate objection. So let me repeat it. It is necessary that if you're a tax consultant, that you raise objection. The Nigerian factor, or from my little experience, when many people get assessments, they will wait for the 30 days to elapse, 30 days provided by law. Instead of, although under Petroleum Profit Tax Act is 21 days after the initial 60 days. Now, under Peter Sita, all those ones is 30 days. Some people will be going to meet, say, I know so person, I know so person. They will not do any objection. They'll keep visiting people they know. They go and visit Mr. A. They say Mr. A is not around. He will go home, attend burial, return. 2 days to the day, he visits another person. That person is not available. 30 days gone. If you practice that way now, you run a risk. Before, remember what is happening to multi-choice at the Tax Appeal Tribunal in Lagos. They are being compelled to deposit 50% of the undisputed liability. Perhaps in the course of time, they were looking for people how to meet the chairman to convince him, and they waited for the 30 days to elapse. Please make sure you file your objection without delay. Keep to the 30 days, even if you know people. Object first and begin to look for all manner of connections, because we are talking to ourselves as members of the same family. So the tax authority will consider the objection. They may reject the objection and issue you NORA. But know that notice of refusal to amend is no longer compulsory. Under Order 3 Rule 1 of TAT rules, any person aggrieved can file an appeal, whether he receives a NORA or not. So if you read in any law telling you that NORA must be issued, then you go home sleeping, waiting for NORA to be issued. You will just waste time and the 30 days will elapse. So it is necessary, please go to the next one. It is necessary that if you feel aggrieved, you should do something about it. Part 2, assessment via reconciliation meeting, tax mediation, tax arbitration. Tax mediation is allowed even in our system, although not properly incorporated. What do we mean by mediation? In a mediation, you don't have somebody compelling the two parties to do anything. You are not even an arbiter. You're only in the middle so that the parties will be seen to have a third party who is listening to them to enable them to reconcile. You cannot impose anything, and but you continue to explain to them, guide them. They may decide to reconcile, they may decide not to reconcile. So the Lagos Multi-Door Courthouse applies that one because some of these tax matters go to the State High Court. The State High Court feels this is some multi-door matters at the Lagos Multi-Door Court. Is it okay? So I've handled mediation matters, but it has not been properly incorporated into our tax laws. That is the position. So, can you hear me? Hello? No, there. No. Hello? Hello?
Yes, continue, sir. We are enjoying you.
Okay, I just want to be sure that I'm not on a frolic of my own.
Not at all, sir. Even Professor Godwin is listening to you.
Prof, don't worry. So now tax arbitration. The main authority on tax arbitration is ESO Petroleum and Production Nigeria Limited and SNEPCO. If we get to any point you find it difficult to hear me, alert me because I'm looking for something to plug my laptop, but let me continue. The position in Nigeria is that tax arbitration is not allowed. In arbitration, somebody will take a decision after listening to the two parties and decide that one person is right and the other person is wrong. So not only in Nigeria, in Uganda, we cited Heritage Oil and Gas Limited and Uganda Revenue Authority. We have not reached that maturity in Nigeria to apply. Anyway, our laws doesn't provide for it. It doesn't. Now, I need to let you know that tax status, I'm in 2.4 now. Status very strict. We have a provision that in appropriate cases we can invoke our powers. The case study below, I will explain to you how strict we can be in certain times, but definitely not to the point of encouraging tax evasion. We have the literal rule of interpretation, the golden rule. That is for theoretical purposes, for those who want to use this paper beyond practical. So when we prepare papers like this, we make it theoretical so that people can use it. But in the course of presentation, we pick out those ones that definitely make practitioners understand how the system operates. For instance, let me give you an example of, if you look, there is mischief rule here. Beyond the law, you will read about it. Let me tell you how we applied it in a case so that it will make sense to you. Under interpretation of status, mischief rule. In the case of Nigeria Breweries PLC and Abia State Board of Internal Revenue, the issue there was whether Abia State should collect tax on gratuity from Nigeria Breweries employees who are resident in Abia State. So what was before us was whether to accept the position of Abia State or to accept the position of Nigeria Breweries. Now we looked at Section 3 of Personal Income Tax Act, which is the charging clause of that legislation. We didn't see gratuity. Then we looked back when the law was originally made in 1993. We discovered that that charging clause contained gratuity. We asked ourselves, at what point was gratuity removed from being chargeable in the main section? We now found it in Decree number 32 of 1996, otherwise known as Finance Miscellaneous Taxation Provisions Decree number 32 of 1996. That was the decree that removed gratuity from being chargeable to tax. But when they removed it from Section 3, they forgot to remove it from paragraph 18 of the third schedule to the Personal Income Tax Act. And in that schedule, it is stated that any gratuity above 100,000 has to be paid, be chargeable to tax. So whereas the tax authority was relying on that provision in the schedule, Nigeria Breweries was relying upon Section 3 as presently constituted, that the main section does not contain it. So one of the rules of interpretation we applied was the mischief rule. We asked ourselves, since it is no longer in Section 3, the main section, Decree number 32, what was of 1996, what mischief did it intend to cure when it removed gratuity from Section 3 of Peter? So what we applied there was the mischief rule, asking ourselves, what was, if you look at the paper now, you'll be seeing 4 things to be considered. What was the common law before making of the act? Anyway, that one doesn't apply here. That's from where the principle, the rule originated in Hedding's case. The second one, what was the mischief and defect for which the common law did not provide? What remedy Parliament had resolved and appointed to cure the disease of the common law? 4, the true reason for the remedy. We asked ourselves, gratuity was there in 1993. People cried out. The federal government removed it in 1996 from the main section, but forgot or retained it in the schedule. We now got decided cases that explain that a schedule is a handmaid of the main section, that the purpose of a schedule is to just explain the main section. So if not, something is not in the main section and it's in the schedule, then what will the schedule be explaining? You cannot put something on nothing and expect it to stand. It will collapse. So we came to the position that since it is not in the charging section, therefore there was nothing for the schedule to explain, because the mischief in section 3 of 1993 original Peter, Principal Act of Peter, had been cured by decree number 32 of 1996 and provided a remedy that gratuity should not be chargeable to tax. That was how we came to a conclusion and held that gratuity in the private sector, gratuity was not chargeable, or is not chargeable to tax. And because of that, those who can remember at that time, NECA, Nigeria Employers Consultative Assembly, they sent out a publication to all their members, informing them that henceforth that they should not pay gratuity to any tax authority, that the Southeast Zone of the Tax Appeal Tribunal had removed or had decided that gratuity was not chargeable to tax. So that brings you to the nature of the paper we are presenting, that TAT to the rescue. That's dispute resolution in the tax, dispute resolution in the tax system, Tax Appeal Tribunal to the rescue. That our decision was eventually, there was an eventual amendment in 2019, properly placing gratuity under paragraph 6 of the 6th schedule to the Personal Income Tax Act. So it is no longer argued. So you can see how TAT has influenced the tax system by just reaching that decision. So, and I want you to, some people keep asking, When there is that, why is it that certain decisions are decided in favor of the taxpayer? I refer them to 2.4.1 of this paper, the last case, the second to the last case cited, the case of Aderawo Timber Company Limited and Federal Board of Inland Revenue. That in a tax statute where there is a doubt, it will be resolved in favor of the taxpayer. The reason being that government is so powerful. The taxpayer is just a very poor person who cannot match government. Government is a leviathan. So if government had packaged everything perfectly and there is something they have forgotten or they didn't do well, it is expected that such open window should be resolved in favor of the taxpayer. So how do Nigerian courts interpret tax status? I refer you find time to look at that one into continuation of 2.4.1. So please go and find out how they interpret tax status for theoretical purpose. And more so when you want to write your objections, what we have written are good enough to help you to know the position of the law and know how to write your objections. So you can look at advantages and disadvantages of the two dispute resolution mechanisms. Please read that one. Let's go to the main thing. Okay. The advantage.
My lord.
Yes.
You have 5 minutes, sir.
Okay, go to the cases, case study. The other ones you can undo yourself. Go down to the case study. Just to review the cases. Go down. Move on. Yes, please, 3.3, go to 3.3. My doctor, please, you make it 10 minutes so to enable me explain these cases to them all. Case study.
Subject to approval of my chairman, you can continue.
3.3A. The case of First Bank Nigeria Limited and Anambra State Internal Revenue Service. It was delivered, the judgment was delivered on 13th September 2021 by the Tax Appeal Tribunal Southeast Zone. What was in issue is that the Anambra State Internal Revenue Service made a demand notice, assessed First Bank to 102 billion for 6 years for purpose of collection of stamp duties on electronic receipts. So we found out at the same time, that is involving individuals, so pursuant to Section 4, subsection 2 of the Stamp Duties Act, read in combination with Section 53B of the Finance Act 2019. We found out that there is a pending Supreme Court case where Anambra State is the fourth plaintiff on stamp duties, requesting from the federal government to remit money, stamp duties they collected on electronic receipts. And they should remit, involving individuals, they should remit it to the states. And they are asking for 176 billion for 6 years. Now, on average, Anambra will get 4.9 billion. So if Anambra is asking from the Supreme Court 4.9 billion for 6 years, why is it asking from First Bank for 6 years, 102 billion? So we came to a conclusion that they cannot approbate and reprobate. You're asking from federal government, you're also asking from banks at the same time. By asking from federal government, you have accepted that they were collecting on your behalf. Why are you now going to disturb the banks to collect again on the same item? So that was how we dismissed the case. So let me go to the next one. So, but that is the locus classicus now concerning, okay, no. The locus classicus on stamp duties in Nigeria from Tax Appeal Tribunal. I just shortened it because of time. You need to get the judgment and read it. Any issue concerning collection of stamp duties on electronic receipts from banks. So please know that there is a case. We discussed so many cases there. We did a review of all cases decided concerning stamp duties before coming to that conclusion. So then the case of Michael Lodo and the Ebonyi State Internal Revenue Service. Barrister Michael Lodo is a lawyer from Ebonyi State who is doing cases against opponents of the Ebonyi State governor. The Internal Revenue Service got activated and gave him BOJ 50 million. And this lawyer had been paying his taxes and collecting tax clearance, except for the 2 years before this matter arose. He paid, but they didn't give him tax clearance. When the matter came before us, from all the circumstances of the case, we found out that the BOJ was punitive and declared it invalid. There are other reasons why we declared it invalid. But in any case, not because of the political, we did not consider anything political about it. Now, we now invoked our power that this lawyer did not present his income to the tax authority in Ebonyi State. And from the case he did before us, he avoided declaring his income. And this is a duty upon him pursuant to section 24F of the Constitution. We said no. If we allow this lawyer to go like that, it will mean that the tax authority will not know his income. The tribunal does not know his income. Then he will be in breach of his duty under section 24F. So we invoked our power pursuant to the 5th schedule of the FIRS Act, paragraph 15. So what we did was to place a reasonable BOJ on him, and we told him to go and pay to the tax authority. So that case is locus classicus also in his own area, where the TAT will not want to support tax evasion, even though the case of a tax authority is bad, but we will not, because it is bad, go and support somebody hiding his income. So after declaring that the documents were bad, we still came back to place a very reasonable BOJ. I think we declared his income 1 million, 1.5, 2 million. So at the end of the day, I think everything was around 3 million. And the BOJ, the taxable income was calculated, and the actual personal income tax was computed. And he was told to go and pay. But another thing you shouldn't forget, those years for which he was given tax clearance, we told the tax authority that they cannot give somebody tax clearance pursuant to section 85 of Peter and turn around and begin to disturb the person again when the tax clearance does not contain any condition. Because under subsection 7 of section 85 of Peter, you can issue tax clearance and add a condition to it. But once it is not there, you cannot turn around and discountenance a tax clearance. Once it is issued, it's binding on you. The reason is that it's against public policy for you to be playing tricks on taxpayers. If you issue it, you mean it. You cannot issue it and turn around and swallow your words and say, no, I didn't mean it. No. It's against public policy. So that's Michael Lodo. You will see how that the Nexem Petroleum, I want you to take a look at it. It has to do with the Pensions Act. Should I continue, sir, or should I leave them to go and read up these ones? Hello, sir.
Yes, continue. We still have 3 minutes for you.
Nexem Petroleum, 3 minutes will not do, but let me explain Nexem Petroleum. In Nexem Petroleum, let me explain to you Section 4 of the Pension Reform Act provides that, especially Section 4 subsection 1, that this account you open at PFA, Pension Fund Administrators. You open an account, the employer pays 10%, the employee pays 8%. It went further in subsection 3 to say that the employer and employee can agree to pay more than 8%, to deduct more than 8% of the employees' emoluments as into the retainership savings account. Retainership savings account in the PFA. Yes. So what happened here in this case is that we got once you agree beyond that 18%, it is called voluntary, what do you call it? So voluntary pension contribution. For 18%, it is called mandatory pension contribution. Let me say it again. If you follow what Section 4 subsection 1 of PRA 2014 provides, if you confine yourself to that 18%, it is mandatory pension contribution. If you add more, it will amount to voluntary, meaning, and you are not supposed to pay tax on it too. Pursuant to Section 10 of the Pension Reform Act. Previously, you need to get the permission of the Board of Internal Revenue by virtue of Section 20, subsection 1 of Personal Income Tax Act. But it has been amended in Finance Act 2019 that you don't need permission of anybody. Now, in Finance Act 2020, they further amended it that no, you will get permission of National Pension Commission. They didn't write it like that, but they said it has to be in accordance with the Pension Reform Act 2014. And the obvious implication is that if you want to exceed the mandatory, necessarily you get the permission of PENCOM. But once PENCOM has given you permission, it is not for the tax authority to begin to collect tax beyond the mandatory. But you are supposed to communicate the tax authority. Here, Lagos State Internal Revenue Service told the company to pay for arrears of purported liability arising from voluntary pension contribution. The company next thing said, we didn't collect the money, so how can we pay the tax? LIRS said, you ought to have collected it. Whether you collected it or not, you must pay. So the Tax Appeal Tribunal Lagos said, the taxpayer was supposed, this is not, the company is not, it's just your tax agent. And the law does not compel him to collect anything on this. So you cannot collect the money. So that was the decision in Nexim. So I've just reduced what you read there. All the grammar you will read there, I've just reduced it. Then this Nigeria Breweries PLC and Abia State Board of Pay, I've explained this one. So I will not go to that one. E, I go to E now. So I've explained Nigeria Breweries PLC. So concerning gratuity. Then in E, Citibank, Nigeria Limited and LIRS. The dispute centered on the implications of Section 1933(1) to paragraph 26 of Peter with regards to composition or computation of gross income for the purpose of calculating the consolidated relief allowance. See, let me just give you the simple explanation. You are aware that Section 29(2) of Finance Act 2020 has amended Section 33 of Personal Income Tax. Now, that amendment is to the effect of changing the computation of consolidated relief allowance, such that prior to Finance Act 2020, the computation was different from that of Finance Act 2020. What Lagos State government was asking from Citibank here happened before. Lagos State was claiming arrears that arose before the Finance Act 2020 and wanted the computation to be done in line with the provisions of Finance Act 2020. The Tax Appeal Tribunal Lagos Zone refused and said by the time this liability or arrears arose, this is the way computation was done. How was it done? You know the gross income. Then you do the deductibles. When you come to get you also remove the consolidated relief allowance. You come and get the taxable income. Now, with this new one, that type of computation is not exactly the same. So in Citibank, the Tax Appeal Tribunal came to the rescue because if it did not interpret the law the way it did, Lagos State government would Internal Revenue Service would have compelled Citibank to pay for what it did not deduct. That would have been the position. So finally, I'm rushing it because of time. I wanted to give much more explanation. But American International School, F, and FRS, you are aware that the contention there was whether a company limited by guarantee is liable to income tax in Nigeria. If you go to Section 23 of Peter, you will realize that any company with public character will not, the profit is exempt. It is exempted, so it will not pay tax because it's completely exempt. So that led to some schools incorporating as CAC as limited by guarantee, but they run these schools to make profit and share. FRS said no, whether you are incorporated by guarantee or not, it's not our business. Since you charge school fees, you get the money and utilize, and you don't run it completely as a charitable body that runs the organization as one of public character. Therefore, you must pay tax. Originally, Tax Appeal Tribunal Lagos Zone said, yes, being a company limited by guarantee, they are not supposed to pay. But in the case of Best Children International Schools, the Court of Appeal came to a position that it must pay. And that led to the amendment of Section 23 in Finance Act 2019, Section 23 of CITA, which redefine what public character means. So no matter how you register the company, if you be making profit to put in your pocket, you must pay tax. It doesn't matter whether it's called limited liability company, limited by guarantee. So where did Tax Appeal Tribunal come in? Tax Appeal Tribunal came in because by this earlier decision in American International School, the thinking was that once you are limited by guarantee, your profit will not be taxed. But when the matter, in the case of Best International children's school. The matter went up to Court of Appeal, and Court of Appeal reversed the position of the law as contained in American International Schools, which was decided by the Tax Appeal Tribunal. So that of Best International School was not a Tax Appeal Tribunal case, but based on the conflict between the decision of the TAT and that of the Court of Appeal in a different case, but similar. So the Finance Act had to come in to make it straight. So the Finance Act had to come in to straighten the matter. Now you now see how Tax Appeal Tribunal has come to the rescue. Because of time, I'm going to stop here, but there are many cases that from the TAT that have reshaped the taxation geography of Nigeria. Thank you very much.
Thank you so much, my Lord Spiritual and Temperature. You have done justice within the short time to this paper. I can tell you that our question session is bubbling with questions, and I know you are more than capable to do justice to these questions. I'm going to start with the first question from Lawa Musibao. The question goes, sir, what is the maximum period for back duty investigation to be carried out by tax authority on company's account? 2, the minimum tax payable by taxpayer whose income is more than 100,000 but sustain loss before tax. There are 2 questions from Lawa Musibao. 1, what is the maximum period for back duty investigation to be carried out by tax authority on company's account? Secondly, the minimum tax payable by taxpayer whose income is more than 100,000 but sustain loss before tax.
Okay, let's take the second one first. See, I believe it's 100 million it means. Is it 100,000 or 100 million?
No, he was talking about the taxpayer whose income it should be more than 100,000 but sustain loss before tax.
That is the taxpayer. Is it a company or an individual?
Well, I think it's referring to, well, he is not substantial, but just a taxpayer. So maybe we could ask him to clarify for that, but maybe we'll take the first question.
Yeah, let's take the first one. The maximum period is 6 years. 6 years. But if there is fraud, willful deceit, it will extend beyond 6 years. But let me tell you how they are exploiting a tax authority. What tax authorities do is just to, instead of writing you for tax audit, they change it to tax investigation.
Yeah.
They call it tax investigation to enable them go beyond 6 years.
Beyond 6 years, exactly.
But what the tribunal has told them is this: merely changing the nomenclature will not make you to go beyond the 6 years. For it to turn to tax investigation, you will first do a tax audit and identify the area of fraud.
Yes, exactly.
So you do a tax audit first, identify and when you identify the area of fraud, you will reduce it to particulars and send it to the taxpayer and say, when we did a tax audit, we identified the following areas that we think you committed fraud. It must be reduced to particulars one by one to enable the person defend himself. After the person, and when you are going towards the issue of fraud, you also have in mind that you may charge the person to court for tax evasion. So you may eventually bring the person under the penal sections of that tax law. So if you are claiming to do investigation, you need to even carry out forensic audit. It's not just you just go to somewhere, look at 2 figures, you come and claim somebody has committed fraud. Fraud is a very serious matter. Even to allege it is something very serious. So we don't want people to be playing with fraud. They just have to really establish fraud. Otherwise, as far as we are concerned, what we have carried out is a tax audit. And any period beyond the 6 years, we knock it down.
Okay, sir. I think the second question has been rephrased. He was actually talking about 100 million turnover. And the company is actually having a loss before the tax computed. So he was asking what should be the minimum tax to be paid.
Please refer the person to section 33 of Companies Income Tax Act. You should just go and open it and see. It has been amended. Yes, it has been amended. But as we speak now, one of the recommendations in the Finance Bill 2021, which will accompany the appropriation bill by CITN. CITN has recommended that when there is such a loss, that minimum tax should not be paid because it's punitive. So
yes,
that as we speak today, we still pay minimum tax, whether you run at a loss or not.
Exactly.
For further reading, go to section 33 of CITA. So next question.
Noted. I'm having Tunde Esan. Can you unmute yourself and please address us? Tunde Esan, do you want to talk to us? You can unmute yourself. Okay, I will come back to him. We have Abdul Ghaffar. Abdul Ghaffar, you can unmute yourself and talk to us. Abdul Ghaffar, unmute yourself and talk to us. You raised your hand. Okay, unmute yourself now. You are not, you are, okay, go ahead.
All right. Thank you. Good afternoon.
Good afternoon.
Thank you, Abdul Ghaffar.
Good afternoon, Prof.
Thank you.
Yes, I enjoyed your presentation, and in our local parlance, I want to say it was very sweet. My contribution is in the line of your talk, where you said any law that is not in line with the Constitution is null and void. Now, you quoted some sections and paragraphs in the Constitution where you stated the power of the National Assembly to make laws with regards income, stamp duty, and CGT. But now there's nowhere explicitly stated that the National Assembly can make laws with regards to consumption. So now, can we say from the constitutional point of view that the National Assembly didn't have the power or doesn't have power to make laws with regards to consumption because it's not stated in the law? And I'm particularly referring to this as it relates to the VAT argument that is currently existing. So what's your thought on this, sir? Thank you.
My Lord, over to you, sir.
Okay, although this is outside the paper, but I'll answer it. If the current Value Added Tax Act, in my view, has three components. One, import VAT. Two, interstate VAT. Three, intrastate VAT. This combination of these three, FIRS or the National Assembly has jurisdiction over import VAT and interstate VAT. But intrastate, the National Assembly does not have jurisdiction over it. If the VAT controversy should be looked at from constitutional point of view, removing all the political insinuations to it, you will understand that intrastate VAT falls within the residual list. And by the authority of AGIB and AG Federation, only the State House of Assembly can legislate on the residual list. I also cited the case of AG Ogun State and Alaja Ayinke Aberuagba. In that case, why the sales tax law of Ogun State was struck down was because of the factual nature of that case, whereby it was directed to distributors of beer who were bringing it from Lagos, from Ibadan to Ogun State. So the Supreme Court said that the law was discriminatory, one. Two, it had to do with interstate commerce. I refer you to item 62A of the first part 1, second schedule to the Constitution. It provides for international commerce and interstate commerce. International commerce and interstate commerce are within the exclusive legislative list, and only the National Assembly can legislate on it. No reference was made to interstate commerce. So to the extent that value-added tax will be confined to interstate commerce, the State House of Assembly under the Constitution can legislate on it. Please, I'm not discussing the political side of it. I'm talking about my understanding of the, as a teacher and a tax judge. I teach principles of tax law and policy at the postgraduate level at Faculty of Law, Nasarawa State University. I taught my students to separate, remove, in fact, they took the exam yesterday, to remove politics and discuss the law. And this is what I expect them to answer. To cite these relevant provisions of the law and now say that intrastate commerce falls within, and the authorities, AG Ogun State and Aberuagba, because the Supreme Court said if that law, says tax law, was confined to the commerce within Ogun State, that it wouldn't have struck it down. Go and read the case well. But since it had to be to properly isolate traders bringing something from other states into Ogun State, one, it was discriminatory. Two, interstate commerce does not fall within the competence, legislative competence of the State House of Assembly. So proceed to the next question.
Okay, thank you, sir. I'm now allowing Tunde Esa to please address us.
Hello, my chairman. Can you hear me?
Very clear.
Okay, sir, thank you for a very beautiful session. I've enjoyed every bit of it. I looked at what the Tax Appeal Tribunal did in the case of Multi-Choice Nigeria and FRS. And what it did was to say, oh, you have an option. Either you pay 50% precept or you pay the last sum that you paid as income tax, whichever is lower with 10%, which was beautiful. But recently as 2 weeks ago, the Tax Appeal Tribunal came up with a new set of rules to guide its procedure. It is now mandatory that if a taxpayer disputes an assessment, he is forced to pay a 50% precept before it can be heard, which I think is against the rule of fair hearing. And my question, sir, in the light of extant tax statutes, is that the proper thing to do? Must a disputing taxpayer be forced to pay a precept of 50% before it can be heard? And being an integral part of TAT, sir, what can be done to ensure that this injustice does not stand? Thank you, sir.
Okay, thank you so much. I advise us before we critique a law to actually read it. If you look at Form D81B, you will see it is written deposition as to payment of undisputed / provisional tax. So this law says undisputed. If you can show by way of deposition, by way of an affidavit, that the tax they are requesting from you to pay is totally being disputed, the tribunal can proceed to hear you. But if you don't depose to an affidavit showing that it is completely disputed, then the tribunal will make the order. So these new rules say undisputed, and you can look at, I know you are looking at under 3 Rule 6, which provides for an appeal against the service or relevant tax authority under Rules 1 and 2 of this order. The aggrieved person shall A, pay 50% of disputed amount into designated account by the tribunal before hearing as security for prosecuting the appeal. B, file the notice of appeal as in Form T81A, along with the deposition as in Form T81B. Now, go to T81B, the form is titled Deposition as to payment of undisputed. So whereas the other 3 Rule 6 says disputed amount, the form itself says undisputed amount. I will not tell you what the tribunal will do. This is where tax lawyers come in. So go and do your own work in the face of this supposed conflict. And again, you look at the main law. The main law can be found in paragraph 15, subparagraph 7 of the 5th schedule to the FIRS Act. Paragraph 15, subparagraph 7 of the 5th schedule to the FIRS Act. It is from there they borrowed this, but that one is more flexible than the rules. When you get a lawyer who understands tax law very well, he will tell you how to treat whatever conflict you may find. Otherwise, I don't want to speak as if I'm giving a ruling.
Thank you, my Lord. I know that you know how to wrangle your way out of technical issues of this nature. Okay, we want to allow Abdul Ghani Dairo to please have the floor. Just a few seconds. You can unmute yourself, sir, and address us. Abdul Ghani Dairo.
Thank you, sir. Good afternoon, my prof.
Good afternoon. Thank you.
Good afternoon, sir. I just want to ask this question, just following the person that just asked a question. It's about this tribunal. Now, where we have a tax that is unconstitutional, do we still need to pay this 50% on disputed liability?
The onus will be on you to prove that it's unconstitutional.
Yeah.
Okay,
we are taking the last question now from Ruth. Dear sir, it would be good to know your views on the Federal High Court practice direction issued a couple of months ago. How would you interpret the requirement to pay now and argue later?
The South African practice, South African Revenue Authority, pay now, argue later. You see, one of the things we try to avoid is, even though we present papers, if a matter that will come before me, if I take a definite position on it, lawyers will eventually argue that I'm biased. So some of these things that are live issues, I can only tell you the paper presentation part of it, that one, if anybody feels it's unconstitutional, the person should, usually what they do is people like CITN, Kwara, Ilorin, they can contact a lawyer to give them a legal opinion. And if their members feel strongly about it, they can even contribute money and send somebody to go and test the constitutionality of that provision. Because my own personal position is not going to change anything. Once our people listen, they walk away, they don't take any action. Assuming after giving all these positions, somebody will take action. Now, so you people should consult a lawyer. I'm not supposed to use this opportunity to declare the practice direction constitutional or unconstitutional. No, rather you have to bring a particular case and seek advice. Assuming you raised a particular case, I would have told you what to do in that case. But if you want me to use the purpose of a paper presentation to declare my personal, I'm a tax judge. So I have to be careful, matters that may come before me, to make a general categorization. That's why I took cases we have giving you the background why we took those decisions. And by Monday, I'll be speaking to the Nigeria Governors Forum on some of this, definitely not particularly on this, but things related to some of these things. There are areas we intend to discuss during the course of our. So please, I advise you to go for private legal advice. I'm a tax judge. There are things I'm not required to say. Thank you.
Thank you so much, sir. Thank you to my Lord Spiritual and Temperature. You have done justice to the questions, and you have given us serious eye-openers to the legal implications on some of these tax issues. We are so grateful. I will call on the chairman of Ilorin and District Society to please help us appreciate the paper presenter, my big brother, Honorable Barrister Chukwuemeka Eze. Or anybody from the district, you can unmute yourself, please, and help us appreciate the paper presenter. Any of the East Coast from Ilorin district. I don't believe you people are all sleeping in Ilorin. Okay, I'm going to allow Ibrahim Nyinka to make his comments and at the same time appreciate the paper presenter. So, Ibrahim Nyinka, I've given you permission to unmute yourself and talk to us, then appreciate the paper presenter.
Hello, sir.
Yeah, I'm with you.
Hello, good afternoon, sir.
Thank you.
Afternoon.
Hello, sir. Yeah, I sent a message to the chat box.
Just go ahead with the message. Just go ahead.
The question is, at a point, maybe last year or so, the Lagos State High Court gave a ruling concerning hotels that have been paying consumption tax in Lagos State, that they are exempted from paying VAT. So I don't know the position of the law on this.
The position of the law is that decision, but I think it has been appealed. So until the appeal is decided, they will continue to pay.
Okay.
That's the case of Aruti Omar and AG Federation, Registered Trustees of Hotel Owners and Managers Association of Lagos.
Okay.
Yes.
Okay.
All right.
Honorable
okay,
Taiwo, you can unmute yourself now and do justice to appreciating our paper presenter.
Thank you, sir. Hello, sir.
Yeah,
yes, sir.
We are with you. Please go ahead.
Thank you, sir. On behalf of Ilorin and District Society, we want to sincerely appreciate our paper presenter and all previous paper presenter for the job well done and imparting our knowledge on us. We so much appreciate them, and we pray Almighty God will continue to be with them and guide them aright in all their endeavor. Thank you all. We really appreciate.
Thank you so much, sir. And on this note, I'm sorry, our time is fast spent. We will not be able to take more questions, but however, we can channel our questions through the Education Secretariat. You can send the mails to my auntie, Yetunde Suleiman, or Auntie Ronke. The information will get to us, And I can assure you that apart from my big brother, Barrister Eze, there are other lawyers in the house that will be able to do justice to your questions. So on that note, I want to appreciate all the paper presenters for today. They have done justice to the various topics they have handled, and not forgetting our secretariat headed by Ronke Ojo, Yetunde Suleiman, and Sister Patricia, the backroom staffs, in person of our IT teke specialist. He has been doing a human job despite the fact that he's behind the scene. Equally want to appreciate the council for the privilege to have this webinar, and my big boss, Professor Godwin Oyedeku, for the privilege to anchor this session today. Then most especially, I want to appreciate Ilorin and District Society for being a good host. Thank you, professional colleagues, ladies and gentlemen. This is how far we can go today. May God bless us and bless our country, Nigeria, and bless CITN. Madam Yetunde, please, you are the host. You can take it off from there.
All right, sir. Thank you, Dr. Omar-Buzo. I can bet you everybody on this platform did have a splendid time today, the paper presenters, and then you have been a great host that made the house so interesting. We want to thank everybody today that has joined us, especially the Ilorin and District. We have over 150 participants for this webinar training, which is a very good one. We want to thank everybody present, and we hope that you will join subsequently. We have other 2 webinars to be held this year, and then we also have a physical one in Kano. That is the regional, the north region. That is physical for all those, for everyone that is wanting to attend physical training. So we'll be expecting members to join us for the physical training. For this, we have we still have Makodi, and then we still also have Kano webinar for the rest of 2021. Thank you once again, and I say we all have a wonderful day. We want to end the program for today, so we'll see you next time. Thank you.